This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to the Research Talks podcast here on Stockbox with, of course, Alan Green. And how are you doing, Alan, this Friday?
Good morning, Mark. I'm feeling slightly jaded after a pretty busy week, and
Indeed, me too.
We were saying before we came on air, it's just been one of those weeks. I think when you expect things to sort of, have a gentle run down to Christmas, and of course it's been anything but. But busy is good, so can't complain. But
yes,
yeah, I'm looking forward to when the bell rings this afternoon.
Good. Good. Yes, and indeed, yes, it's been a busy week for us as well. Lots of companies wanting to get in a bit of a summary of the year and set the scene for 2024. So maybe next week will be completely dead. Maybe we'll have a few more coming in. I don't know. But gosh, yeah. A week Sunday, I'll be on an aircraft. I'm flying to the UK on Christmas Eve. It's the first time I've ever done that, but I'm leaving it as late as I can. I think the cheapest flight was also on Christmas Eve, but there's also something special about going to Schiphol Airport, getting in the lounge at Christmas time. It's very, as a Home Alone sort of feel to it. It's very Christmassy. There's lots of trees and decorations and nice music. If we're lucky to get some of the white stuff, it will really set me and my wife up for Christmas, and then we'll land in the UK on Christmas Eve and have a week of with the family in the UK for Christmas. So it should be quite nice.
That'll be lovely, and of course, on the way, if it's dark and you keep an eye out of the window, you never know who you might see.
Oh, exactly! You never know who you might see.
Rudolph leading the way with a big red light on his nose. But there you go.
Indeed. But anyway, today we want to talk about Acuity risk management. I interviewed Angus, and that went out yesterday. Again, he gave a bit of a summary of the year, but it also timed quite with their single biggest contract win of the year with an existing client, and they're setting up nicely for next year. And Power Metal Resources, a catch up on Power, one of the favourites that we talk about, given stuff seems to be sort of starting to move again. But anyway, I'll let you tell us all about it. And Acuity, you want to start with?
Yep, let's start with Acuity, Mark. But certainly, things are starting to move. There is a sense, whether it's a Santa Claus-inspired rally. Personally, I hope it's something more substantial. I think it is. I think we've been waiting for a recovery in this sector. And of course, when you go through these phases, if there's any good news from the company you're invested in, you might see a blip, and then you might see the share price come back down again. That's because we're in capitulation phase, where so many people have sat on the share, lost money, and if they see a blip in the share price, they make a snap decision to sell, and of course they're out. And that then means that eventually all of that selling pressure stops. So you're then left with a stock that is still doing what it does and is actually making good money, but is valued at a deep discount. And the hope is, of course, that what we're seeing now is more buyers coming to the market, so more buyers than sellers, which creates an upward pressure on the share price rather than a downward pressure. So we've seen some movement over the past few days. It's early days, but let's hope we're in for that Christmas rally. But anyway, Acuity have had a pretty good year. And again, look at the share price chart. It won't tell you that. We've seen looking at the shares now trading at 5p, just off those year lows where we've seen it trading at 4.35p. So we're seeing some progress now, and I think with any business like this, it's quite a binary business in a sense. The company was formerly the investment company Drums, of course, and it then acquired Acuity, a company specializing in GRC, that's governance, risk management, and compliance. And it has developed a comprehensive software package called Stream. It's an award-winning platform to provide this software as a service to clients to run their businesses and run their operations on. Now, this is a huge burgeoning market. It's currently worth about $15 billion globally, expected to rise to 27 billion by 2027. And certainly Acuity are one of the key players in there. Within the group, of course, Mark, you mentioned Angus Forrest. He's chairman, chief executive of the main group. You've then got Kerry Chambers, who worked her way through from chief operations officer. She's now chief executive. I've spoken to Kerry, of course. Very nice, very driven lady who's really understands the business, understands the offering, and understands the marketplace very well indeed. Then, of course, you've had chairman and founder Richard Mail, Simon Marvel, founder and executive. Both those gentlemen have taken very much a back seat now, but still very much involved as shareholders. So as the business has developed, I mentioned the software as a service, that the way the offering is provided to clients. Stream is sold software as a service, but it's also sold as a private cloud delivery as well. Typically on a 3-year license, and a lot of the contract wins that we've seen over the year have been 3-year contract wins. And of course, Mark, you mentioned the largest contract win. I'll come to that in a second, but that was a big step forward for the company. The company also provides professional services. So of course, when you go into a company and it's looking to take in the software to basically manage its processes and provide the appropriate governance, risk management, and compliance for its operations, there's a consultation process. So the company consults, then once it understands the business processes, it designs the system around those processes, and then of course it builds and configures it after training up the customers before handing over. And so of course we've seen this business build, and the model is the model is very profitable. Of course, there's a team of programmers behind it, sort of headed up by Kerry and the team. But of course, it requires volume, it requires further sales, and then you get with a company like this, you get that tipping point where all of a sudden the economies of scale really start to kick in. You've got the core product, you've got the sales team, everything's in place, and you've got a real opportunity to scale this up into that huge market, that huge burgeoning market. And indeed, although, as I said at the start, the share price performance hasn't really reflected that this year. We've seen. I mean, I've just reading this back, sort of really from May 30th. Acuity announced it had won a new partnership with Netitude to integrate Stream into its cybersecurity solutions. June 9th, leading British insurer adopts the Stream platform. Then, of course, Stream won a huge contract in July, really significant, and I think this contract was really pivotal for the group in terms of its ability to reach out into certainly governmental organisations across the globe. It won a contract with the British government worth £388,000 over 3 years, with a further option, a 4th-year option to which would be charged at 125,000. Then in September, another contract win with Stream. And also at that point, we saw the full year numbers. Revenues of 1.75 million, up from 1.55 previously, slightly increased losses. And then in October, 2 new 3-year contract wins. One contract with Stream worth 85,000, one 3-year contract worth 160,000. And then a couple of days ago, the largest ever contract win, a 5-year contract for 561,000, announced by the company. Now, also at that point, we had a trading update as well, and the company announced it had generated £955,000 worth of orders, just under £1 million worth of orders since April the 1st. Forward contracted revenues of 2.9 million and a sales pipeline of 5.7 million. And the 5.7 million is up dramatically from the 3.8 million last time. So you can see the trend here. The company is just adding contract on contract. And of course, with the nature of these contracts, once you're embedded in the company, once you're embedded in a government organization, then the longevity is there, the renewal rate's there, and the likelihood then of being able to open doors and get into sell other contracts becomes much easier. So I think we're starting to see an exponential growth curve in sales for this company. And I think that's also being recognized as well by investors, because in November it was announced that a Jonathan Swan held 3% in the company. So that's of course significant. And I think we're going to see other organizations, possibly institutions, look at Acuity, look at its business model, look at the way it's winning contracts. And I think position where it is now, we've seen a bit of a blip up in the share price, back up to 5p from that 0.435, that 4.35p low. But I think at this juncture now, we are really starting to see an upward trajectory in the share price. And who knows, if they keep on building contract wins like this, we could be looking at what's referred to as a hockey stick curve.
Yeah, indeed. I think it's hang on. Yes, indeed. I think it's could definitely be the case. I mean, as Angus said to me, I think it was only yesterday when I interviewed him. Interviews out on Stockbox. It's been a very good year for the company. They completed the RTO earlier in the year, and they've gone through and appointed Kerry Chambers there as CEO, and got a few contract wins coming in, and start off small. I think, as he said to me, with like a small contract, 50, £100,000, sort of test the waters, and then go from there. And I mean, they obviously can't disclose exactly who it is in the British government, but the fact they've said that, I think, is pretty significant, and one can speculate that perhaps it's to do with cybersecurity or something like that, or it could be anything though, couldn't it? I mean, any British government department need to have risk mitigation software. So
Absolutely,
great win for them.
Well, it was a really significant win, and I think what tends to happen with these sort of contract wins is once the system is embedded and is shown to be providing the requisite service within that department, department heads will talk to department heads around the world, and the sales process then becomes almost a consultative approach. It's the sales basically being agreed before you even get there, because that particular department head has seen it in action within another department. So actually, it's not so much a sales process as a consultation process. And I think if the team work hard and pick up on these, or certainly take around examples and success stories from the clients they have, I think they're going to ramp up the customer numbers very quickly, and of course that will lead to revenue too. And this is the retention rate is over 96%, which is incredible. I mean, for any company to have a client retention rate of over 96% is so good, because you can build a business on that. What your revenue is going to be. It's a real cash cow of business and a big cash generator. And I think, at some point, if the company carries on building like this, it's then going to hopefully look at shareholders and start to provide a dividend at some point in the future.
Yeah, indeed. Well, I'm looking forward to seeing what Kerry and Angus and the team do throughout 2024. They want to really make headway. We talked about, obviously, Ondo as well, wanting to make headway in the United States, and the same thing with Acuity, with their partnerships there, which I think is the route into the United States there. So hopefully, I hope not another, but hopefully a very good year coming up for them. Just pressing on with what they're doing, really. I think he said more of the same, but it's a sales-driven business, so
Yeah, it is very much so. And I think, but I think the sales tools that the company needs, because with any product like this, you'll have those first few contract wins, and then of course, it's that referral process. So the sales, the head of compliance of the company will tell the head of compliance now the company, "Oh, we're using this system. It's really good, really intuitive, all the rest of it." So easy sale there, and then you get all of the people you sold to becoming your salespeople. So that's how this process works, and I think that process is now starting to accelerate at Acuity.
Indeed. Okay, well, thank you, Alan. Let's talk about power then, Power Metal Resources, some of the latest things that are going on there.
Power Metal Resources. It's Power is a hell of a company. I mean, it's we've spoken about this over the years, and I've
Really
looked at
tired.
the investment proposition, how to break it down, how to compare, how to draw comparisons with other companies out there, so you can provide a valuation against the multitude of projects that the company is managing and putting together. And of course, it's been so difficult in these markets because there's no correlation seemingly between the value that investors and shareholders see in a company versus the market capitalization itself. And I think the classic example in case here is speaking to Neil Elliott at Mind to Money, and of course Neil Elliott was the head of corporate development at Cornish Lithium, and the company it's a private company. They've raised £54 million, £24 from the UK Infrastructure Bank, and £6 million on Crowdcube. So the company is fully funded for all its activities through to the middle of 2025. So with that sort of money raised, you would expect to be looking at a company, maybe with a market capitalization of 200 to 300 million. But we've got a company with a set of operations around the world that you would think should be able to share a similar sort of market capitalization. But that's very much not the case. And that's because we have this disconnect in the markets between the listed entity and, of course, the company itself. And that's a combination of factors. We've spoken about the contributory factors and the reasons behind this. It is, in my opinion, primarily due to the risk-off approach that we've seen. Seasoned, experienced investors understand what they're looking at, and they understand they're seeing that there are opportunities in the marketplace, but we're in a high interest rate environment. There's less spare cash around than there was a year ago. And also, of course, you've had you've had rising interest rates. Those now seem to have peaked for the time being. They're not going down, but if we continue into next year, then we might start to see inflation fall further still. And in that event, we'll start to see interest rates start to come down too. And at that juncture, I think we're going to see a more risk-off approach. But as you know, markets tend to act 6 to 9 months in advance of that. So what we've seen over the past few weeks may be an indication that perhaps that slightly more adventurous risk-off approach is starting to percolate into the markets now. So that's my view on the market. But with Power Metal, we have a combination of projects which I have undergone this process several times with Power, looked at the projects and drawn a comparison with other companies out there, and then it's up to investors really to draw their own conclusions from this. But when you add the properties up, so for example, the company, of course, has the stake in Golden Metal Resources. Now, Golden Metal Resources currently trading at just under 9p, market capitalization of about 9 million. So Power still has a 60% stake in GMET. That makes it the valuation at about £5 million. So that's GMET. We then come to a stake in a pre-IPO company that, of course, is First Development Resources, and that's the company that has assets in Western Australia, Braeside West, Ripon Hills, in Patterson Province, and also the Celta project in Central Australia. Company raised 1.1 million in June 2022, but due to market conditions, the IPO has been delayed. Power Metal have got a 58% stake in that, so it may come to market with a valuation of about 7 million, in which case that will give Power a stake worth about 4.2 million, let's say. We then have the uranium properties, and that of course is being packaged up, or these have been packaged up in Canada into uranium energy exploration. That's an IPO that's planned. Sean and the team have got this planned and on the runway. So again, how do we take a valuation in this company? Power will have a stake, so I'm going to attribute a valuation of about 7 million sterling to Power's stake in that upcoming IPO. Then there was a little stake in the Hanetti project, which of course is with Katora Gold. Hanetti's a joint venture. Power Metal owns 35%, so Katora valuation is pretty minimal. So I've attributed a notional £100,000 valuation there too to the Hanetti project. Again, shoot me down in flames, tell me I'm wrong, tell me it should be 50K, and that's fine. I'll accept that. But this is how I'm working towards a valuation for the company's assets. We then, of course, have Malopo Farms, and again, that big old indicator, that jelly bean indicator underground. Further news today from the group. That underground anomaly is longer than expected. It's bigger than expected. It's a really strong signal from that. So it's going to be really exciting when they actually undertake a detailed drilling campaign there to further assess the size, the scale, and also the mineralization of that huge anomaly under the ground there. But again, you compare that to, say, Kavango Resources, which has got similar assets within a similar region. We could say their evaluation of about 4 to 5 million. So that would give Power Metal a stake in that. It owns 87.7%, of course, of Kalahari Key Minerals. So that would give an asset valuation to Power Metal probably of about £2 million. Again, tell me I'm wrong, and that's fine. But use this model to calculate the valuation. We then come to the assets in Australia. So there are licenses in the Victoria Goldfields, and of course, as we've seen over the past few weeks and months, the ECR Minerals team are back in Victoria, just literally up the road from the assets, the Beringer Gold Mine, the Ballarat Gold Mine. ECR are drilling just up the road from there in Creswick. We know there's a Ballarat Gold Mine that already produces. This is a joint venture between Red Rock Resources and Power Metal. And again, given where ECR's valuation is at the moment, given Power Metal, given the Victoria licenses are probably worth 2/3 of that, I would attribute a valuation to New Ballarat Gold Corporation of about £2.5 million. Then, of course, we come to First Class Metals, and Mark, you've spoken at length to Mark Sale, as have I, and we know the team at First Class very, very well indeed. First Class, of course, it was initially driven to market through Power Metal. Power Metal still have a 28% stake in there. So given where First Class Metals market cap is at the moment, I'd say a valuation there of about £2 million. So you can see where I'm heading with this. We then go back to Canada. We have the Silver Peak project in British Columbia. Again, series of mineral claims, prospective of silver, zinc, copper, and other minerals. Comparison there, Canasil Resources listed on the Canadian Venture Exchange, about a 2.5-3 million valuation there. So a notional valuation, given Power Metal have a stake there of about £500,000. And again, that valuation could be argued either way. We then fly halfway around the world again to Botswana, the Tati Greenstone Belt project, which is a greenstone mineral belt that's prospective for gold, nickel, copper, and the platinum group metals. 2 drill programs there already, so we're seeing some good grades coming out of the ground. This is owned 100% by Power Metals. Again, draw comparison. So the closest company drilling for gold we know is ECR Minerals. So I would attribute probably a 4 million valuation there, given where Tati Greenstone is at present. So we then sort of start to get a sum of the parts valuation together, and of course it's always difficult when we're looking at these. But my estimate here so far is that if we take these together, we're looking at a valuation of in the region of about 29 to 30 million pounds, but probably let's round it up and say 30 million. Now, when I did this assessment or conducted this assessment back in March this year, we came up with a total figure of 44.8 million. And I think at that point, we thought the IPOs were closer than they are, but I think we now have the prospect of the IPO for uranium energy, and of course the IPO next year for First Development Resources, looking highly probable. I know, Mark, you interviewed and spoke with Tristan Potters recently, and I too have spoken with Tristan. I think I think there's definitely a sense with First Development Resources that company is going to make it to market sooner rather than later. So I think we can safely attribute a valuation at this level to PAL, which of course means Power Metal is currently trading with a market capitalization of 15 million. So we are roughly valued at half the value of those projects. And I think as the year progresses, or as the year comes to a close and we move into 2025, Sean and his team will develop this business. They'll bring those IPOs to market. And of course, we saw a move in gold metal recently, Gold Metal Resources, the Garfield project really starting to deliver there. They of course had the pilot mounted project, the tungsten project, which is moving along nicely. Oliver and the team doing a great job, and I think we're going to see progress there. And of course, what that will do is it'll directly impact onto the Power Metal balance sheet, because Power Metal are major shareholders in that company. Ditto with First Class Metals, of course, and of course with the other two IPOs that are on the way to market too. So in total, I think at 15 million market capitalization at 0.75 of a P, Power Metal offers great value, and it offers a great spread of risk too. Unlike perhaps some of the companies out there that have a more binary investment proposition, in that they have one, maybe two projects. What we've got here is a raft of projects that are all coming to fruition at different times, and as such will deliver value at different times. But if we were in a stronger market, I think we'd easily achieve this 30 million valuation, without really sort of building up a head of steam. And then of course once the IPO start to perform, there's an awful lot more upside to come.
Indeed. Well, thank you, Alan. I was talking to Charles Archer the other week, this week actually, and the podcast will be out in the next few days. We did talk on Power Metal Resources, and he said he could certainly see Power Metal Resources at about sort of circa 3p in the next sort of 1 to 2 years, which is obviously significant upside from where we are now. And I think it did touch 3p once, didn't it? From memory, did it get it? It did get there, yeah. But things are obviously more advanced now. But he sort of suggested that perhaps at the moment anyway, the market is just not valuing like land packages or footprint, and it perhaps more comes down to success on the drill bit, let's say, for example. But at the moment, it's just the market's just not valuing the fact that a company might have a lot of land packages that potentially are worth quite a lot of money. So it'll come round at some point. And also helped by if there's any success on the drill bit, they are of course going to be drilling, as you say, at Malopo Farms going into the new year. So there's that's the first bit of perhaps exploration news we can see going into the new year. And then of course the spin outs as well. And the recent news on I think that must have been what the market liked, was the UEE, because that's the market, the share price moved on that news, didn't it? On the sort of pre-IPO funding of UEE there. Or
did,
who knows?
yeah.
It could just be like you said, the markets are turning a little bit. We saw Panther Metals was up 20% but there's no news.
Well, I think this is what's happening. I think we're seeing these projects at different phases in their evolution, but certainly my sense is that the past few weeks we've seen some activity and movement in the share prices of companies that are actively engaged in exploration and are delivering results, assay results, and of course active drill programs. So and the great thing with Power Metal is it's got exposure on so many fronts. It is exposed to drilling. So yeah, as you say, Malopo Farms, Mark, drilling program coming out there. The Tati Greenstone Belt I mentioned. I mean that's hugely valuable. Real potential for gold there. Lots of sort of activity and historical activity in the area. And then of course we have we do have some of these joint ventures that have gone quiet. The Haneti joint venture. And the Silver Peak project in British Columbia. So all of these will start to pick up at some point, and you then add those to that picture of the stakes Power Metal has in gold metal, in first class metals, into of course First Development Resources, into uranium energy, and the UAE IPO very much underway, and I think there are Power Metal as an individual entity, I think, has more share price drivers than any of the mining companies we've spoken about recently, because those drivers can come from so many different quarters, and that's the attractive thing about the company. And it also means that that spread of risk is the risk weighting is far lower. So as this risk off approach starts to build in the market, it may be companies like Power Metal Resources that will be the first beneficiaries of that, because investors will assess each company, each project, and then they'll look at Power Metals and realize that Power Metal, of course, has this raft of projects that it's working on, and of course it has potentially many more drivers than those companies in its peer group.
Indeed. Well, thank you very much, Alan, for your time today. Acuity and Power Metal Resources that we've talked about. Maybe next week we can do a bit of maybe we can do our own roundup of the year or something. Maybe we can talk about the winners and the losers and what we might do next year. We do it every year, don't we? So maybe we should have a more of a general chat about the year and what we think might be looking good next year, because of course that will be the last time we speak until the new year, I imagine.
It will be, Mark, but yeah, let's have a full roundup, and I think we can start to, we can start to sort of throw the hats into the ring for the various companies we think are going to be the outperformers for 2024.
Indeed. Well, thank you very much, Alan, and I wish you a pleasant weekend this week.
Thank you, Mark. You too.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.